Hello friends, myself CA Amit Bansal. Today we are going to discuss the topic of income from house property under Income Tax Act. So section 22 of Income Tax Act provides the basic conditions which is covered under section 22 to recognize an income as income from house property. First condition is ownership. Assessee should be owner of the property or should be the deemed owner of the property. Deemed owner means assessee has shall be assumed as deemed owner of the property if he has transferred his property without adequate consideration to his spouse or to his minor child not being married daughter. Other cases of deemed owner is if he is a member of an association of person, society, company, or if he has received possession in part performance of a contract as defined in section 53A of Transfer of Property Act. If and other condition of deemed owner, if he has in possession of a property under lease which exceeds 12 years. So in all these conditions he would be treated as deemed owner, and income earned by him would from any property would be chargeable under the head income from house property. Second condition for second condition for an income to be treated as income from house property, that income should be from the building or land appurtenant thereto, such that rental income should come from the building or land appurtenant thereto. Suppose if someone earns rental income from a vacant plot of land, then it would not be considered under the head income from house property. Similarly, letting out of machinery, furniture, plant, rental income from these sources would also not be considered under the head income from house property. So, main two conditions, one is ownership and second is building or land appurtenant there. So these are the basic conditions for an income to be treated under the head income from house property. Then we come on section 23, which talks about the annual value of the house property. First, it says that fair rental value, rent which is expected to be recovered from as per the market conditions, is annual value. Suppose, and second condition is if the house or property has actually been let out and the amount received is excess than the fair rental value, then the actual amount received or receivable in the form of rent would be treated as annual value. But there is one condition, that if the actual rent received or receivable annually is less due to the vacancy losses or due to the vacancy of the property for a whole or part of the year, then the less amount of actual rent received or receivable, lesser amount of actual amount received or receivable would be considered as an annual value. It can be understood with the help of an example. Suppose fair rental value is 1,20,000 and actual rent received is 10,000 per month, so 1,20,000. So annual value would be 1,20,000 since actual rent received is more than the fair rental value. Now, if there is a vacancy for 3 months, for 3 months it was lying vacant, so actual rent received would be 90,000. So in that case, annual value would be 90,000 as per the conditions mentioned in section 23 of Income Tax Act. And there is also an explanation in section 23 subsection 1 that actual rent received or receivable would also not include any unrealized rent. What is the meaning of unrealized rent? That the rent which has not been received and there are certain other conditions which need to be satisfied, That first one, the tenancy should be bona fide. Second one is defaulting tenant has vacated the property or steps has been taken by the owner to get the property vacated. Default tenant is not in occupation of any other property of the owner. Or fourth one is taxpayer has taken all reasonable steps to recover the area unrealized rent or could convince the AO that it would be useless to take any steps. So, actual rent received or receivable would be exclusive of unrealized rent. Now we come under subsection 2 of section 23. It talks about the cases under which the annual value is considered as nil. There are two cases. First one, property is self-occupied during the whole year by the owner. And second condition is if it could not be occupied by the owner due to its job or business at any other place, provided nil value would not be allowed if it is let out during the whole or any part of, of the year during the previous year. So in that case, annual value would be in above these two cases, the annual value would be considered as nil. Uh, and then comes under section 24, which talks about the deduction from the house property. And one thing I would like to mention in section 23 in respect, and there are conditions that only maximum two houses can be considered as self-occupied, and not more than two houses can be considered as self-occupied. If there are more than two houses which are not let out during the previous year, suppose there are three houses, then two houses can be considered as self-occupied, but third one would be considered as deemed to be let out, and fair rental value would be its annual value, and uh, income would be computed accordingly. Then there comes section 24, which talks about the deduction from the house property. So whatever the annual value, we will deduct municipal rent, which is on payment basis, not on due basis, and that would be called net annual value. From the net annual value, we will deduct 30% standard deduction under section 24, subsection 1. And then we will deduct if there is any interest on the borrowed capital which is used for the construction of the house. Suppose borrowed capital has been used for the construction of the house which is self-occupied, then the maximum amount which is deductible as interest from house property, interest on loan for the purpose of house property would be rupees 2 lakh and not more than that. And there are certain cases if we could discuss. Suppose I have got one house and it has been self-occupied by me during the whole year, then annual value would be nil. Suppose for the part of the year it has been self-occupied, and for the part of the year it has been given on rent. So for the part of the year on for which it has been given on rent, rent would be actual rent received or receivable would be its annual value. Suppose if there are two houses and one is let out and other is self-occupied, the one which is self-occupied, the annual value would be treated as nil, and in respect of the other house, fair rental value or actual rent received or receivable, whichever is higher, would be its annual value. Suppose there are three houses uh, and all three were not let out during the previous year. So in respect of the two houses at the option of an assessee can be considered as self-occupied and their annual value would be nil. And in respect of the third house, it would be considered as deemed to be let out, and fair rental value would be its annual value and would be taxable accordingly. But there is one exception. If property which is not let out during the previous year, but assessee has taken the steps to let out that property, but he could not get success in letting out that property, then the annual value would be considered as nil because of the vacancy allowance, because there was an active effort on the part of the owner to let out that property. If there was no active effort, then that property would have been considered as deemed to be let out, and fair rental value would be considered its annual value and would be charged accordingly as per Income Tax Act under the head income from house property. So these are all the scenarios, different scenarios in which income is considered under the head income from house property. If you have any query or question, you can write a mail to me at akb79@rediffmail.com. Thank you.